So we are moving over to your Learning Unit 3, which is our VAT chapter. So you can see it's called Value Added Tax and Source Documents. Very practical chapter. You are required to do quite a bit of calculations. Also some very important theory. So what I've tried to do for my way of summarizing this learning unit is to just outline some of the more important aspects and some of the aspects that I've experienced students struggle with sometimes. So you definitely please still need to, I want to say, firstly, go and look at all your lectures, make sure you attend your lectures, and then use this to supplement your VAT knowledge. Okay, so Learning Unit 3, Value Added Tax and Source Documents. Okay, so like I mentioned, the reason why I'm doing this learning unit in the way that I'm dealing with it is because of the fact that this learning unit forms some important building blocks for your learning unit 4 and moving forwards. Okay, so some of the aspects that we work with in learning unit 3 are critical for you to be able to understand your source documents, your unpacking your source documents correctly, and being able to complete learning unit 4 journal transactions. Okay, so I'm dealing with this specific to next learning unit. So if you are sitting with learning unit 4 and 5, you're battling with the VAT breakdowns, please come back to these slides, come and refer to them. I'm sure they will help you understand your learning unit 4 and 5 a bit better. Okay, so some of the important aspects in terms of VAT. So first and foremost, we get different VAT supply categories. Okay, so different categories that our VAT, I want to say, eligible items fall into. And we classify these categories by the goods, the items that we buy. Okay, so we get standard rated, we get zero rated, we get non-allowable items, and we get exempt supplies. Okay, so that's your 4 categories, non-negotiable. You need to know them, you need to understand them. And on the right-hand slide, I reminded you to please understand what the categories are for and what items fall into these categories. Okay, so standard rated are our everyday goods. So you buy your food in Pick n Pay. That's generally things that have a VAT percentage added onto them. And if we as a business buy them, we can generally claim the VAT back. Okay, so the 15% that we paid over and above what the price of the item actually should be, we can claim back the 15%. Okay, so standard rate items, we can claim the VAT back. We need to take 15% of the price paid for these items into account. So for now, I just want you to start viewing things with price, VAT, total price. Okay, so if you have a till slip or anything close by the last time you went and bought anything at a store, quickly take that, look at it, and see that it's actually got a breakdown. Okay, there are rand figures for everything that you bought. At the end, there should be some amount for VAT. So that's why I speak about VAT as a separate item almost on your till slip, just so that you can start becoming aware of VAT as a standalone item that we deal with. Okay, reason being we deal with it separately is because remember, we have to pay SARS. That goes to the South African Revenue Service. So it's not ours. So that's why we try to almost say, okay, what would we have sold the item for? We need to put VAT on, and that's the total price because SARS takes their cut. Okay, so back to my 4 categories. So the first category, I said we have standard rated items, typically things we can claim VAT back the VAT on. So again, let's use a simple example. I've bought some food items for 115 Rand. 15 Rand of that I'm going to be able to claim back from SARS, okay, because I'm a registered VAT business. Any other category we have, we can't actually claim back anything. Okay, so no VAT needs to be calculated. This is very relevant for Learning Unit 4. So those 3 categories are zero rated items, non-allowable items, and exempt supplies. The reason why I say that we're not going to claim back any VAT, so you don't need to calculate it, is because zero rated items have a 0% VAT rate, which means 0 means nothing. So if I buy fresh fruit and things like that, if I pay 15 Rand, there is 0 VAT. So there's no VAT I need to work out. So therefore, I don't need to calculate any VAT because I don't need to book any VAT in my records because there's nothing that I can claim back from SARS. So a bit of a technicality, a zero rated item is a VAT item, just at 0%. Okay, take note of your textbook on the difference. Standard rated is a VAT item with a VAT rate of 15%. Okay, so both of those, just maybe highlight number 1 and number 2, actually have VAT. One at 0, one at 15. Okay, so that's why the 15 one we'll calculate and we claim it back because we have actually paid for it. Okay, 0, we obviously effectively didn't pay anything. Then you get your third category, the non-allowable items. So these are the things that they have VAT on. We paid VAT for them, but we bought them, and SARS, they don't really regard these things as being very necessary for our business. So what they then say is, okay, well, you bought all of this, great, you can. We paid money, we book it in, it's fantastic. We can't claim the VAT back. Okay, which means we also don't need to work the VAT out because we can't claim it back. So why would we even work the VAT out to start off with? Okay, so your textbook breaks down non-allowable items for you in a bit more detail. So again, things that SARS in general, they don't regard as business expenses, they don't regard as necessary expenses. You can imagine otherwise businesses would claim back absolutely everything they buy. They obviously go quite excessive, buy quite fancy vehicles, send all their employees for weekly lunches, because everything that they pay, they can just get the VAT back. Okay, so things that are, I want to say, luxurious or not really necessary for the business, SARS regards as non-allowable, which means although we paid VAT, technically they look like standard rated. There are the kinds of items that SARS says, no, we can't claim the VAT back. Okay, and then lastly, you get exempt supplies. So exempt supplies are just literally things I always say that falls outside the VAT basket. So they don't have that. They're not registered. They're not VAT items. They're not VAT applicable almost. So again, also we obviously won't then work out the VAT. Okay, so that is on things that we buy. So we'll either pay VAT. We are then able to claim it back. So we'll work out the 15% so that we know what the 15% is that we are going to get back. If that item is zero rated, the VAT was 0, so there's no need to work it out. If that item was a non-allowable item, we also don't need to work it out because we're not going to get it back anyway. If that item was an exempt item, it has no VAT, so no need to work it out. Okay, so please familiarize yourself with the 4 categories, understand what they are, what items they have underneath them, so that when you come across you're buying apples, or you're buying milk, or you're buying brown bread, or you're buying a vehicle, you know exactly what category those specific items fall in. Okay, because you're learning unit 4 and 5 and carrying on further, they won't tell you, oh, you are buying fuel, and remember fuel is 0 rated. You need to know fuel is 0 rated. Okay, so that's the relevance of knowing and understanding these 4 categories. Okay, so just a reminder, that's why I said standard rated items, we can claim back the VAT. So that's why we work out the 15%. For 0 and non-allowable and exempt supplies, for different reasons, we can't get the VAT back. So that's why we don't need to work it out. Okay, that's on things that we buy in a business. When we move over to the section in red, there I am speaking about income made. Okay, remember, as a business, we are buying lots of goods in, we are then producing a product. Okay, so when we produce that product and we start selling it, SARS takes 15% on anything that we sell. Okay, so any income really. So any income on sales, any services that we offer. I mean, I might be a doctor or a dentist. I might not necessarily sell homemade products and cakes and rusks and things. So whatever income I produce, SARS wants 15% of that. Okay, so that's how they make their revenue. They take 15% of any sales for a business or any income earned in a business. So that's why when we decide on the prices that we are going to sell something for or offer a service at, I need to be mindful of the fact that if I say I'm going to offer a service at 200 Rand, SARS is going to take 15% of that 200. So that's why I should rather then offer the service at 230 Rand, because SARS will get 30, so I can still keep the 200. And that's why I say there at the bottom of the slide, we need to work out the VAT so we know what portion we need to pay over to SARS. So when we do the bookkeeping for any revenue, any income, we need to work out what is the 15% that SARS needs to get allocated for the service or the sale or this income that I've just made.